All right, let's talk about why I want people to be careful if they're planning on trying to ape out on this Bitcoin diagonal breakout that may be coming up that everyone's talking about. First, I'd like to start here on a lower time frame and just kind of zoom in real quick and take a look at what we basically been doing for the last 30 days, the last 4 weeks. We've basically had a top in the 20,000 400, 20,500 kind of range. We've had some wicks that get up past that, and you get up into like the 20,450 maybe. But for the most part, you're really finding a peak in the like even 20,350, 20,250, stuff like that. I mean, that's literally been the highest we've gone. On an even lower time frame than that, if you look at what people really get caught up in, they get caught up emotionally in what's happening right now. And if you look at what's happening right now, what we've got over the last week is you've got the fact that we can't seem to bust above 19,500 for the most part. We get some wicks into the 19,550, and then from there we get rejected. So 19,500, 19,550 has become extreme resistance at this point, whereas it used to be support. And that seems to be trending down a bit and getting even worse over the last few days. You start to see the sell-offs happen even before the 550. You start to see the bears step in, take control, red candles follow. Just earlier in the last half hour, I've seen them run it up and get right to 19,497 exactly. The bears step in, run it back down, start all over with the stairs up, elevator down theory. Now, if you're kind of caught into this, or you started trading over the course of this last week, and you get overly emotionally involved and overly connected to this trend, and you start feeling like, okay, well, I'm down here and this 19,500 range, if I break past this, then I'm really at a go, I'm going up into here. And for some people, if you're on a super short-term scalp, that might work. But if you're looking at a bigger time frame and a bigger trend, then right above you, you've got this 20,400, 20,500. So you're not going too far before you hit major resistance, if anyone's thinking they're looking at a really big breakout. And then to kind of zoom out even further from there, what I'd really like to talk about is the diagonal breakout. The breakout that I think is really going to get a lot of people in trouble and throw a lot of people off. I think that when you get caught in these lower time frames and then you bust above them, turn them to some support, then people just instantly start talking about 25, 30,000 again real quick, or, get off track with emotions, adrenaline, things of that nature. So moving forward, what I personally see we're working with here is I do believe that if we get, even decent news, or possibly even tonight, if you wake up, and I mean, we're all on different time schedules, so it depends on where you're trading. But as if you're trading the US, as the US goes to sleep and then the Asian markets and other markets kick in, if they start running this up, we could very easily break through this 19.5. And if we start to open green in the stock markets, start immediately pushing up into this 20,500 range. And if we were to do that and we push past this and we break this trend line, this is where I think things get most volatile for people who aren't looking at the bigger picture. Basically, if you break this trend line, you come up here and you start turning the trend line into support, and you're paying more attention to the diagonal trend line versus the horizontal lines that we've got for resistance and support, I think you're going to find yourself possibly setting yourself up for failure. What I would like people to really pay attention to is a couple of things. First of all, if you look at this last month, you come back here and you look at this peak. We peaked in the 25. If you want to talk about the wicks, we wicked up it's like 25,250. But with Bitcoin moving the way it does, if you're looking at the larger trend, if you're looking at the more important values, you're really trying to invest, things of that nature, you're wondering where to buy. I mean, really all these things are oversold at this point. If you have a long enough term investment idea, then, this is all good DCA timeframes. Just look for the lows, keep DCAing little by little. But if you're looking to, trade over the course of the next few weeks, or if you're looking to trade over the course of, the next few days, something shorter time frame, and you think these are going to lead to some, crazy gains, you're going back to, 25,000 if you break out of this, or you're, at least coming up to this 23, and that's just, kind of how you feel it's written in the cards. You've got these trend lines, resistance, support. You'd flip this into support. Boom, you've got this as next resistance. It seems super straightforward for you. Like to bring in to picture this kind of idea. Basically, what I'm seeing here is, if you don't worry about the couple $100 move, what you got is we found a top at 25,000. You come back down here a couple weeks later, and you've got a top of 23,000. You went through all of this drama in between, maybe made people feel like they finally found a bottom down here and this was good to go. And then boom, 23. We've come down here and we've done the same thing again. And if people break this trend line even more so, they really think they're going to be going. What I would like to take note of is, you go from the 25 to the 23, and if we continue this trend that we're on, there's a very good chance you're going to see something in the 21,000, maybe 21,500 or something like that, becoming the next top before we move back down again and possibly even go lower, or just get into a tighter range and continue to grab this, low 18,000, like 18,300, 18,250, stuff like that, as your new support. If you do break through these things and you break this diagonal trend line, you break this resistance at 20,500, then still keep in mind you have immediate horizontal resistance at the 23,000 range. You can call it, 22.5, 22.7, 750, whatever you want, depending on if you want to count these wicks of the candles, or if you want to stay more safe with when to get in and when to get out, pay more attention to the, the actual bodies. If you were to push up into this range and, you were someone who knows that that's what you're looking for, I would honestly really consider taking profits aggressively off the table, starting around 21.5, maybe pull again at 21.8, pull again at 22.1, 22.3, something like that. Just keep pulling percentages of your gains, maybe 10% at a time, 20% at a time off of the table, stuff like that. The big question is, once we end up into this box, what are we going to do? Are we going to turn 20,500 into support, or is it going to remain resistance and we continue to get stuck in a tighter and tighter box? If we continue with the trend that we're on, the way I see it, without any major news in the other way, just the trend the way it's going right now, it looks like the bears have managed to box us in down below 19,500. That's what it's turning into. And the range is getting tighter. It's looking like it's going to possibly turn into 19,500 down to 18,250. And then as people start to grab those buys a little sooner, you're really looking at, like, the buys start to come in at, 18,005, then 18,750, stuff like that. Whereas you've got resistance at 19,500, you're really starting to get into a tight range. Unless you're really good at trading, really good at scalping, really enjoy gambling with it, or using heavy leverage or large amounts of money to make small plays, there's really not a lot to gain here. You're really getting to a point where you're better off sitting on your hands. You're better off being out of the market, and you're better off, if you're looking at a longer term thesis, just continuing to DCA little by little. Look for these bottoms, at the 18,000 range, or 18,005, or even 19,000. Every time you hit 19 flat, just start buying, because we're continuing to, hit into these ranges. As far as going forward in a much larger picture, you would then, even if you got past this and you turn 23 into support, then you really got this 25. You've got 25,000 as your last peak. And if we get all, euphoric, the stock market starts running, things start seeming crazy, I would be very hesitant to continue aping in from this point forward. And I think that's what I might even title the video here is, don't ape out the breakout, or be careful of the Bitcoin diagonal breakout, something along those lines. I'll play with it in a minute to see what happens before it gets posted. But I really think people need to be cautious playing these levels right here. And if nothing else, at least make sure that you're watching these levels and you're open to them in your mind. Don't just think that if you get above this 19.5, all of a sudden you're game for 20,003. That's not exactly guaranteed. You could start turning this into resistance right here at 19.8. If you do run all the way up to this magnet, which I do see is very feasible in this coming week if the stocks were to open green and we were to get some sort of, a little bit of good news or a little bit of a relief rally, this will come really fast. I do still think even if we're going to break through it, you'll possibly get a bounce off of it, then a retest, especially since we'll be coming from being below it and almost turning 19.5 into resistance. If you come up, you blast through 19.5, you go straight up to 20,450 range. I believe you need to come back down, test in this, just above 19.5 range, come back up. Then you could easily break through here and go forward. Another thing I would pay attention to is, even though these are imaginary lines, how do the candles begin to interact with these lines? If you get up into this range and you start bouncing in this range where, I've got this red line, well, then maybe you're turning, this whole area into support. If you come up and it just seems real funny that as it's bouncing down, it's bouncing on this trend line as well, or whatever trend lines you have, you can adjust yours to what, you see fits your beliefs. I mean, none of this is exact science. I mean, this is all theories of relativity, and really each person has to learn to make their own final decision. And if you're someone who just never finds themselves being someone who's ever going to want to technically play with the charts or chart their own levels, at least find a variety of people to follow. Find someone that you like that's bearish, find someone you like that's bullish, find a couple of people that are just in between, kind of telling both narratives maybe, and try to make your most educated decision based on all that information that you put in your head. If you're really just looking to invest in crypto for retirement, all of this area that we're in is just a great area to DCA. I mean, all of it's oversold. You've got a great future ahead of you. Buying anywhere down here, fast forward, 18 to 36 months, you should be looking pretty good. Fast forward 3 to 5 years, quite possibly, some of the best investments of your life will be made right now. And do it in a way that, if you've got a set amount of money you're ready to put in, and you say, okay, well, everyone says we're oversold, these are great areas to DCA, it doesn't mean we can't go lower. So save some of that. Preserve capital. Capital preservation is very important right now. And if you wanted to say, say if someone, for instance, had, 1,000 or 10,000, break that up into percentages yourself, and say, okay, maybe I'll put 25% in now, and then wait and see if we drop down to 18,000 or below, and then maybe add some more, and then wait and see, do we drop down and get some of these crazy prices people are talking about? Are we going to, 15,000, 12,000, 10,000, things like that, of that nature? And, get those prices as well. You don't want to just be all in at 19,000 and then find out we are going to, 9,000, and, you've lost 50%. So, I don't know. I know FOMO plays a part. People say, well, what if we get this breakout and then it comes up here and, it's the last time I can ever buy below 20,000 again. What I would say is at least make that purchase knowing we could go down quite a bit more from here to find real support, depending on what these markets do and how far back this pullback is going to go. If, once again, you don't really care because you're looking at it on a longer term investment, then, maybe that's just a blip in the radar. You'll kind of miss you didn't get the bottom, but, it's still good. We're oversold, and, looking at a 3 to 5x moving forward over the next 3 to 5 years, buying it these price levels on most things. But for people trading more actively, people trading, daily, hourly, weekly, monthly, things like that, please pay attention to what I'm seeing here. We went from 25 being a peak, no matter what drama you get and where you think you're going. 23 became a peak. We've got drama. We don't know where we're going. Good chance 21 range becomes a peak. and maybe we're stuck in here, or maybe we finally get the next leg down. So definitely trade open-minded to different scenarios and kind of watch what you're looking for from, I guess I'd want to say, try to incorporate other people's opinions into what you think. If you think you've got a set idea that you're just 100% firm on, maybe you're too firm, maybe you're, overly confident. It happens. I mean, crypto is money, Bitcoin is money. Human nature is, controlled by greed, and we just seem to get the endorphins going, get the adrenalines going, and make a lot of mistakes. I mean, it's no different than a night in Reno or Vegas or Atlantic City, whatever. I mean, this is all a lot of guesswork, and people should be careful with this. Trade safely, trade wisely, and if you want to know what I actually think happens here, real quick, personally, if we can get a decent open to the markets, I think we could blast through this 19.5 range, come up into here, maybe come back down, come up, possibly turn this into support, start playing with this over the next few days. And then coming into later in this month, if that's when we finally get the bad news, that's when we could end up seeing something come straight back down. If we open the markets tomorrow and we're red, you are going to see this whole 19.5 possibility of resistance range become a fact for a moment, at least on a temporary time frame. And instantly tomorrow morning, this will come down here. And you'll be lucky if it holds at the 18.2. And we will then possibly be bouncing in this box and now in an even tighter range, looking for actual direction. So just be cautious and remember that in a bear market, especially one with, I mean, this is not like a bear market anyone's ever seen before. You've got multiple black swan events happening back to back. You've got more money printed in the last, couple years than in the 40 years prior. So how low can we go is a very open-ended question, not just in crypto, but also in the stock market. So please be cautious, capital preservation, trade wisely, and live to fight another day. I'll try to make some more videos. Hope I'm helping some.